Hello, welcome to European Open Briefing for Monday, February the 5th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So the US dollar surged on Friday following a much stronger than expected jobs report out of the US, though the dollar has paired some of those gains. The strong rebound put heavy selling pressure on other currencies, particularly commodity-linked currencies. The euro and the pound also fell sharply, though the euro has proved the most resilient. We've seen global stock markets around the world plummet as government bond yields have jumped since the jobs report on the expectations that global inflation will be much stronger than expected in 2018 and therefore leading to tighter monetary policies around the world. Gold and oil are both down sharply as well following the rebound in the US dollar. So let's start now with the US currency. We can see the dollar yen did briefly climb back above the key 110 level before retreating to around 109.80 at the moment. The dollar index didn't see too much of a strong rebound. We can see it didn't even manage to climb above the 90 level. It's currently trading around 89.20. So the US jobs report was very positive indeed. On Friday we saw non-farm payrolls coming in at 200,000 versus expectations of 180,000. But more importantly, we saw wage pressures creeping up. We saw average earnings rising by an annual rate of 2.9% versus expectations of 2.6%. So these are all for the month of January. So that's the strongest wage growth in 8.5 years. We also had other strong data on Friday, including factory orders and the University of Michigan Consumer Sentiment Survey. So the dollar yen managed to hit a 1.5-week high. Dollar index only received a modest bounce. On the other hand, 10-year Treasury yields jumped to a 4-year high of 2.885% earlier this morning in Asian trading. One of the reasons holding down the dollar is perhaps that ongoing political uncertainty surrounding President Trump. On Friday, the House Republicans released a memo that accuses the FBI and the Justice Department of bias against President Trump in the Russia investigation. So that story doesn't seem to be coming to an end anytime soon and keeps creeping up and causing a bit of anxiety in the markets, but also the sell-off in global equities has led to some risk of sentiment this morning. So that is also pressuring dollar yen. We can see here in the chart the Dow Jones and the S&P 500. Both of them fell sharply on Friday, recording their biggest daily loss in 1.5 years. Dow Jones fell by 2.5%, the S&P 500 by 2.1%. Globally, stocks aren't doing well either. The MSCI All Country World Index fell at its most last week since January 2016, shedding 3.4%. And we're seeing big losses in Asian and European stocks this morning. And the yen is broadly firmer as a result of this risk of sentiment. We did have fairly dovish remarks by Bank of Japan Governor Haruko Kuroda speaking in Parliament. He basically reiterated Bank of Japan's pledge to maintain easy monetary policy. We also heard from Japan's Prime Minister, who said it was too early to call an end to deflation, but the yen is still up due to the risk aversion we're seeing this morning. Moving on to European currencies, we can see the euro briefly fell to just above the 1.24 level. It's rebounded to around 1.2450 at the moment. Some uncertainty regarding the coalition talks in Germany. Merkel's party and the SDP missed Sunday's deadline to conclude the talks, so the talks are still ongoing, but there is little doubt that they will manage to reach some sort of a deal. The pound has come under more pressure, though. It briefly fell below 1.41 before climbing back just above it. It was trading about 1.42 early on Friday, late on Thursday. We're hearing reports that the UK government has ruled out maintaining some sort of a customs union with the EU once it leaves it. Normally this would have been negative for the markets, but we haven't seen much of a reaction to that. Also, Theresa May did come under pressure last week from her own party to give more clarity on Brexit and to provide a stronger leadership. But the pound is mostly concerned about the Bank of England. Bank of England will hold its first policy meeting of the year on Wednesday, Thursday. The announcement is due on Thursday, along with the bank's quarterly projections. If the bank does raise its forecasts, both for inflation and growth, that could potentially pave the way for an interest rate hike as early as May, and that could give the pound a further boost, which happens to be one of the best performing currencies against the dollar so far this year. Moving on to commodities, we can see commodity currencies, the Australian and the New Zealand dollars. The Aussie did drop to 3-week low earlier today of 0.7887. It has managed to rebound back above the 0.79 handle. We did get some positive PMI numbers from China, Australia and Japan, the services PMIs for January, all of which either beat expectations or were an increase on the prior months. So that did help the Aussies slide. We can see, though, the Aussie did decline dramatically, rather sharply on Friday as the dollar posted a rebound. The Kiwi also came under pressure. It hit a 2-week low, 0.7276. It has managed to climb back about the 0.73 level. So the focus for both currencies will be the multi-policy meetings by the RBA and the AUDNZD. The RBA is due to announce its decision tomorrow, and the AUDNZD early on Thursday or late Wednesday, depending on your time zone. It's very possible that both central banks could toughen their language on the exchange rate, given the strong gains for both the Aussie and the Kiwi in recent weeks, and that could potentially put further downside pressure on the two currencies. Moving on to gold prices, we can see that big slump in gold prices on Friday after the NFP report. It briefly fell below the 1,330 level. It is currently slightly up, trading around $1,335 an ounce. Oil, though, did come under more pressures, particularly Brent crude, as that's more sensitive to what happens to the US dollar. Brent crude fell by 1.5% on Friday. It's down a further 0.9% this morning. WTI only fell 0.5% on Friday, though it is down a much more steeper 0.8% this morning. We did have the latest rig count out of the US on Friday. We saw the active rigs climbing by 6 to 765 in last week, adding to the prior week's gains of 12. Plus, last week we also had the EIA report, which showed US output rising above 10 million barrels for the first time since the 1970s. So all of that could be weighing on oil prices in the coming days. And finally, looking at today's economic calendar, we can see we just had the Eurozone PMIs, the composite PMI out of the Eurozone. The final reading was revised slightly up for January, though it was mixed for France, which saw a downward revision to the services PMIs. We've got the Eurozone Sentix Index, another survey coming out later, as well as the UK services PMI, and also service PMIs coming out of the US, as well as the ISM non-manufacturing PMI, which is the more important one. Plus, Mario Draghi, ECB president, will be testifying before the European Parliament at 16 hours GMT. That's it from me. Thank you very much for watching, and have a great day.